You're listening to Where You Live with Gene and Tony.
Welcome back to Where You Live with Gene and Tony. Today we're dealing with stories and news articles that are dealing with asking the question, are HOAs losing their freedoms? Are things just going too far? And we want to hear from you today on the subject we just talked about with the woman from Arizona.
Yeah, or any comments or stories you have, 651-289-4488.
And for our listeners here in the first hour, I'd just like to remind you, we have a free subscription. It's a bi-monthly newsletter called What's New. A lot of the topics we cover on the radio show are covered and further detailed in that newsletter. It's yours free for the asking. Give us a call during the week at 952-922-2500. Ask for Courtney, and she'll make sure that you start receiving your subscription. But we're going to kind of change our focus right now and talk about financing for homes. There's been huge changes, hasn't there, Tony, over the last couple of years?
Oh, absolutely there have been. And with the foreclosure crisis and all the changes in foreclosure law, it's been really difficult to keep up with everything that's happening in home purchases, home sales, and home management.
And a lot of this happens, we've talked about this so many times, sir, what's called unintended consequences. Congress takes a look at one item, and so they tweak it one way, hoping to change it, and perhaps they do, but then there are unintended consequences that go with it. Then you see the pendulum change and go the other way.
Yeah.
And we're going to get an opinion from a professional who's dealing in that industry, and if there's someone who knows how the pendulum swings when it comes to financing for a home, it is our guest, Mike Cass, who's Senior Branch Manager at MetLife Home Loans. Good morning, Mike.
Hey, good morning, Gene.
Thanks for being
Mike.
on the show.
I'm glad to be here. I've been listening for a long time.
Oh, good.
Well, tell us, or give our listeners maybe a beginning, what's called the elevator speech, Mike, on who is Mike Cass and MetLife Home Loans.
Yeah, first of all, I'll tell you that I love your unintended consequences because that is so much of what we're all about right now in the industry, trying to deal with some of the changes. But what I'd like your listeners to know is, MetLife Home Loans is actually doing mortgages. I've heard about 1,000 times. I didn't know MetLife did mortgages, and they clearly are. MetLife, we are owned by MetLife Bank, which is a division of the MetLife, and I think most of us are familiar with the MetLife blimp and Peanuts and the Snoopy characters. So the auto, the home, the life insurance, all those things are a part of our corporate offerings. And MetLife decided, we want to be in the home loan business back in 2008. And in a very short time, they've kind of moved into a top 10 position as a lender and continuing to grow as we speak. We're doing residential loans in all 50 states, a full array of programs and products. And to your point, some of these discussions is, lenders want, to make people happy, and they want to do loans. And MetLife certainly, is in that bucket. But it's working with folks that have the experience and, the willpower to really work through issues when they pop up, like the ones you've been talking about.
Well, let's talk about that for a moment here, Mike. Now, a few years ago, I think some of the mess that we've gotten into with mortgages was because there was a cry, was there not, with a lot of constituents, with people in Congress saying home loans are not accessible to people of minorities and to others, and so we need to free up mortgages and money and make it more available for people to have home ownership. Isn't that correct?
Yeah, I think as an industry, I don't know how far back you're referencing as far as legislation, but as an industry, there's a lot of unintended consequences as we try to do the right things.
Mm-hmm. Well, I know early in the 2000s, a lot of the the rules and the criteria around borrowing money to buy a house were relaxed. All kinds of new loan products came on the market that allowed people to have lower income or just stated income, or got around the credit hurdle, or got around the I guess, income and job hurdle, right?
Absolutely.
And that led to, like you said, unintended consequences of a lot of loans going
or
bad.
even having any money or skin in the game.
Any
The
down payment, that's
homeowner
right.
being able to many times
That's
even
right.
borrow up to 125% of the value of
Sure.
the home from the get-go,
Sure.
already underwater, and knowing it, too.
Yeah, so all those things happened because we wanted to make home ownership more available to more people in our culture, and the unintended consequences now have swung us the other way.
And so let me talk to you now. This last July, there was in Congress, Mike, called the Wall Street Reform and Consumer Protection Act, also known as the Dodd-Frank Act. Can you tell our listeners just briefly, what is it and what is it designed to correct?
Well, I think Dodd-Frank was enacted in, I think it was July of this year, and it was legislation that was passed, and it's very far-reaching. I mean, it touches into a lot of things that we're not going to go into on this show. It's, outside of even lending and HOAs, but it impacts each of those individuals in a very large way. And so everybody's trying to respond to the legislation with interpretations and guidelines and spelling out, well, exactly what does this mean? It's a guideline. It's not a hard and fast, black and white rule in some cases. And so we need people, and I know Gene is over in St. Paul quite often, working with the legislature and adding their input as to how do you actually put this into practice.
Yeah.
Yeah, it seems like I have been this year.
Lately, you
Yeah,
certainly
that's
have.
right.
That's right.
Talk to us. Now, there's a couple things here that were specific in that I read about with the Dodd-Frank Act and would like you to comment on. One is what's called the 5% ownership rule. Talk to our listeners about what's that.
Explain what that is.
Yeah, there's a fairly broad statement in the legislation that references the lenders having a 5% credit risk retention, and it's a really simple concept of the lenders, instead of packaging a loan and selling it off and not having any interest in that loan once it's sold to the secondary market, they should have skin in the game. And I mean, I think everybody would agree that that would lead to more responsible lending practices. If you're going to retain a piece of that loan, that's more responsible lending practices. So that's the intended consequence, and then of course there's a lot of interpretation that goes with that.
Yeah.
What are some of the unintended consequences that you see coming?
Well, I think there's a whole bunch of maybes in there, but a lot of there's a lot of definition to that rule that haven't been laid out yet as to exactly how it's going to be enacted. So it's kind of hard to talk about unintended consequences today because it's really not spelled out how it's going to be.
We can talk about that next year.
Well, I suppose just talking real broadly here, Mike, I think of, I would agree with you if a mortgage company now says, no matter what, I'm going to retain 5% ownership of all of these loans. They're going to be thinking a little bit more about what it is that they are approving for someone in terms of purchasing a home. But the other part that I think of is for a lot of lenders, it's important for them to be able to package loans and to be able to sell the loans because that's how they're able to get more money, more income to be able to do more loans. Isn't that correct?
That's right. I mean, I think folks should understand that when you close on your mortgage, I mean, the dollars that are used to fund that mortgage are used over and over again. It's not a one-time investment by the lender. It's the beauty of securitization is we can take that mortgage and use those funds multiple times, and that lowers the cost to the homeowner of the cost of the financing.
Well, it may be too early to talk about unintended consequences, but what issues do you see coming up in trying to enforce this?
Well, I tell you what, before we have him answer that,
all right.
I'm looking at the clock. We've got to take another break. Folks, if you'd like to talk to Mike, if you have a question for him about financing, what this might mean to you, give us a call, 651-289-4488. Mike, we're going to take a quick break. When we come back, we'll continue our discussion with Mike Cass on the future of home loans for condos and townhomes.